Welcome to the Strategic Investor Productions channel. Liking this video and subscribing helps with the algorithm a lot, and we greatly appreciate it. This is a Bitcoin chart that dates back all the way to 2011. You can see there are a few lines that really capture the essence of Bitcoin's historic price action. If you take one bull cycle's lead-in portion of its support and extend it, it does a great job of predicting next cycle highs as a function of time into the cycle. Notice how each bear market takes us down into a new trend for the next bull cycle. The support line for a pullback today could be as low as 20,000 if we drop to it this week. The support line is ascending, which means the longer time goes on, the higher the support line will rise. Considering Bitcoin's historical trend suggests that is the line of support we need to break to take us into the next bull cycle, I would say it is more likely we gradually pull back to that point before seeing an acceleration in selling like we have been in more recent sell-offs like the one in 2018. You can see that Bitcoin's sell-off that started in 2018 was a perfect example of a bump and run pattern where we got the bump as soon as we broke the trend's lead-in support line. You see very similar price action to what you'd expect from a bump and run pattern playing out in nearly all of Bitcoin's macro bear markets, although the further you go back, the more illiquid Bitcoin becomes, and thus the price action on the chart begins to look more gibberish. If we are in the next bear market for Bitcoin, I would be watching for something that resembled a bump and run to play out because of this. Keep in mind, the top of the trend we are in now, as a function of today's date, is up around 160,000. I think the strength and delta of the US dollar and yields across fixed income will play a big part in what Bitcoin decides to do at this moment in time. We will talk more about this shortly. While I think there is reason to believe it is more likely to come down in price, just keep in mind there is inherently risk to both sides at the moment, as we are right in the middle of the trend for this cycle at this date and price. Here you can see that we have a green trend line that has formed after Bitcoin made its initial price discovery that has been an indicator to show when Bitcoin has entered into a period of exuberant confidence. Every time we cross that green line, we end up forming some kind of pattern which has historically either been some kind of pennant or triangle. While they are all not inherently bearish, they were all patterns formed at the top of the trend looking back on it. While not all of Bitcoin's bull market ending patterns have been bearish, we currently find ourselves in a rising wedge. Not only are we in a rising wedge pattern, it has formed two head and shoulder patterns and is now hanging on support with an overall consolidation of volume. Anytime your chart has more heads than a Dugtrio Pokemon, you know something's up. This yellow line I added is not the same yellow line from the first chart we looked at. This support line is anchored to the lowest wick of that bear market rather than the lowest candle body. That is why this one doesn't connect to the top of the move for this cycle. This line, on the other hand, does give us a good target for a short-term pullback on Bitcoin before we get an acceleration in the sell-off, such as what happened in March of last year. This would assume we can gradually pull back to 32,000 before we pick up momentum to the downside. It is hard to pick a price target for the full move because it is a function of time with the trend lines we were taking a look at in the first scenario. Keep in mind, this is assuming we are now in a bear market and yields and the dollar are going to continue becoming a problem for the foreseeable future, which I believe is true in aggregate. The Bitcoin halving event is supposed to play a big role in Bitcoin's cycle in terms of timing, as it is a reduction in supply and usually marks the beginning of a new bull market throughout history. We usually get about a year or two of a bear market, and the rest is spent in accumulation or going parabolic. The next halving cycle is at the beginning of 2024, and the next presidential election is at the end of 2024, which is also suspected at being correlated with the moves due to having the same 4-year cycle. I don't think that was a coincidental move by Satoshi. This being said, we do have several months left to put in a blow-off top on Bitcoin up to 160K, but I think that gets more and more unlikely by the day. As I mentioned, the economic environment is a major headwind to Bitcoin, and I think the technicals are starting to put a nail in the coffin for this cycle. This is an image that displays the psychology of a market cycle. If we are transitioning from complacency into anxiety for this portion of the cycle, which I think we are, it would line up well with the historical timeline for Bitcoin as we understand it so far. This timeline would also put us back into a bull market going into both the halving cycle and presidential election cycle of 2024. This would make a lot of sense to me because a lot of the headwinds we are facing today, not only as an economy, but as a society, are driven by today's woke politicians. The halving event would reduce supply, and the election will increase demand. This will be the next perfect storm for Bitcoin. I keep mentioning the economy as a headwind, so let's take a look at why. Let's look at fixed income, and then we can take a quick look at Forex. This is a chart of 2-year yields. The blue line is its long-term resistance dating all the way back to the 1980s and has been only touched in the beginning of the 80s, 1995, 2000, 2008, and 2018. This blue line is also the beginning of the lead-in phase of a bump and run pattern that is fully outlined with the yellow line on this chart. The first target for a bump and run pattern is the first spot of occurrence of the bump. In this case, it's marked with a red line. If it makes it past this first target, the second target is the start of a lead-in phase, which would be our blue line, albeit our blue line is descending rather than horizontal. I would guess that 2-year yields would want to cool down at our red resistance line, but as you can see, it didn't take long to cut through our last major resistance, and we did so fairly easily. This is where we crossed our yellow line. Even at the same time, it was being intersected by the orange line, which represents a place of significant price action. While the short end of the curve has had a higher delta over the last year, 10-year yields are breaking out higher and look to be doing so with similar deltas to the short end as it's in price discovery. This is a chart of junk bonds rather than yields or treasuries. The red line has been a historical support throughout the years. Every time we break it, junk bonds like to take a big drop. You can see that we also have an orange pennant. Pennants are continuation patterns, and because this pattern had a bearish lead-in, it suggests a move lower. We broke this pennant back in March of 2020, and it rivaled the sell-off we experienced in 2008 until the Fed came in and backed the markets. This time the Fed is trying to reduce their balance sheet, which is the opposite of backing the market. If Powell doesn't pivot again, as this starts to move lower, this could quickly become the solvency crisis that typically follows a liquidity crisis like the one we had in 2020. This is a chart of emerging market bonds denominated in US dollars. This chart is moving lower quickly, even gapping down over the last week to land on support. This is signaling a slowing in growth all over the world. This is a chart of the DXY. With yields moving as fast as they are and growth looking to be slowing, the dollar is becoming more valuable. You can see that we had a really nice bottoming pattern that just broke out and is retesting its point of breakout now. As long as yields continue to move higher, I believe the dollar will be in high demand. Considering most of us look at a chart of Bitcoin that's priced in US dollars, that's probably something to pay attention to. All right, let's take all the pieces of the puzzle we went over and fit them together for the big picture. Bitcoin's trend and price action are signaling a top, and market psychology is likely soon to follow as we transition into the anxiety phase of the cycle. There is a macroeconomic headwind that supports our findings. As we noted, the delta in yields are causing strength in the dollar. We notice that junk and emerging market bonds are likely to see a huge sell-off and a spike in yields there also. The Federal Reserve is tapering and is talking about both raising interest rates and reducing the size of their balance sheet after the tapering is concluded in the near future. That means that not only will they not be backstopping the market, they will also be adding to the problem as time goes on. The supplemental leverage ratio exemptions are expired, which has been a net tightening even with the increase in reverse repo inflow limits. While the Build Back Better plan is facing headwinds itself, the debt ceiling limit was increased by a similar amount to the proposed size of the bill, suggesting a capitulation at some point getting it signed through. If this does happen, this is going to add to the supply being added to the markets, which is going to take yields even higher. Remember, the Federal Reserve said their reason for intervention in 2020 was because the markets had become illiquid. I'm not sure what makes them think that the markets won't become illiquid again this time around, with everyone trying to add more supply to the market, but that's where we're at for the time being. The Federal Reserve is known for pivoting on what they say, so I expect this will eventually lead to that. Having a crashing economy going into 2024 election cycle would be a major headwind for Joe Biden getting reelected. Therefore, if the economy does take another big spill, Biden is going to go on a crusade to prop up asset prices, and I'm sure Jerome Powell will be in a similar boat himself and in no position to argue. This plays into my theory we will probably get our next bull market sometime around 2024 with the election cycle and halving events. The incredibly high amount of reserves in the system is one of the major problems for the economy at the moment. Because of this, I believe that the Build Back Better plan is going to be an event that really breaks the camel's back, as the plan includes direct monthly checks that would be deposits and reserves at a depository agency. This would last for a whole year, providing a consistent flow of deposits and reserves each month that need to be addressed. This is when I believe we might start seeing policy changes, like seeing reserves exempt from the SLR or the inflow limit to reverse repo markets completely removed. Therefore, I think Bitcoin's sell-off will begin to accelerate in the near term and will continue back into a bull market sometime around 2024. Until we see what really happens, it's hard to tell exactly how things are going to play out. I try to use game theory and probabilities to make guesses about what the economy might do next, but when it comes down to it, it's all speculation. Hopefully this perspective can be valuable to all of you out there watching. While I have a portfolio I trade, most of my net worth is invested for the long term, so I tend to hodl through the good and the bad and just collect cash flow from staking or dividends or whatever it may be. I find this is the strategy that works best for me, and I figure mentioning it gives you a better idea of why I hold my perspectives. Anyways, thanks for watching. Like this video to support the channel. Comment your opinion below to let me know what you think about the video, and subscribe to the channel with the bell icon to get notifications when we post content like this. Like always, stay one move ahead. Have a great day.